Good morning, Namaskar, Swagat. I welcome you all in our second session of Income Tax Act. I'm C. Ankit Sharma, your income tax faculty for the session, and good morning to all of you once again. And I believe you all are studying very hard to achieve the goal of your life, that is to become a chartered accountant as soon as possible. So, in the last class, we have discussed about the basic introduction part of income tax. In this chapter, basic concept, I have divided that chapter into three parts. First was introduction, overview, definitions, etc. Second part would be the rates of taxes, and the third part would be agricultural income. So in the first part, we have discussed about some basic definitions, how income tax has came into force, what exactly the meaning of income tax, what is direct tax, indirect tax, etc. Today, we will be discussing some more definitions like person definition. We were discussing Hindu undivided family concept. After that, we need to complete other person definitions. Then what is the meaning of income? There are some exception, assessment year, previous year. And we will start the second part also today, that is rates of taxes. That would be numerical topic. So I believe you must have revised all the provisions what we have discussed in the last session. And before starting the class, okay, good morning, Navneet. Good morning, Linger. Kuldeep, good morning. Shamli, good morning. Neeraj, good morning. Mujahid, good morning, everyone. Okay, so I believe you must have revised all the provision. You must have downloaded the notes. And before getting started, as usual, we will have a thought for the day. So the thought says, do or do not. There is no trial. So you have to be very assured about what you are doing in your life. So if you have decided to complete this course, you have to be sure that yes, I would be a chartered accountant someday. And that someday start from some this day. So do not get into any dilemma that I will complete my CA or not. If you have started this journey, you have to complete it. So be sure about your decision in your life. So please do not, there is nothing try. If you are in this course, in this journey, just give your 100%, whatever you have. You need to do some sacrifice, you need to sacrifice your parties, etc. But this is just for your future. So there is no try in this course. If you have decided to come on this journey, just give your 100%. Okay. That was thought for the day. Let me see if there's any query. Good morning, Pooja. Adil, good morning. Riddhi-ben, good morning. Harivansh, good morning. Okay. So let's start it. Previously, we were discussing the concept of HUF. And in that HUF concept, we have discussed the basic definition of HUF, which has been derived from the definition of joint Hindu family, which is based upon Vedas, etc. Then we have discussed what exactly the meaning of joint Hindu family and what is the difference between a joint Hindu family and a Hindu undivided family. So until a Hindu family who reside together with all male and female members having lineally descended common ancestor, they would be only called joint Hindu family. And if out of those members, some has decided to start a business and registered it as a Hindu undivided family, then the income which would have been generated from that Hindu undivided family business is going to be taxed under income tax as HUF. There is a concept of co-partner and member. We have discussed it that co-partner is more powerful than a member. The basic difference between a co-partner and member, that co-partner can ask for partition, which a member cannot. The co-partner can become the karta, the elder member of the family who is a co-partner can be the karta. Karta means the leader of the family which will represent the Hindu undivided family. The female concept we have discussed up to or before, we can say 6 September 2005. Female could be the member of her father's family till marriage, and after that, that membership ceased to exist. And then she'll become the member of her husband's HUF or JHF. But on or after 6 September 2005, the position has been changed. Now, the daughter would be the co-partner up to marriage as well as after marriage in her father's joint Hindu family or Hindu undivided family. So a daughter can also ask for partition as same as son. And after marriage, she will definitely continue to be the co-partner in the JHF or HUF or her father's family, and also become the member of her husband HUF or JHF. Okay. So till that position, we have discussed the provision. Let's move on further. So a daughter of co-partner by birth shall become a co-partner in her own right in the same manner as the son. Being a co-partner, she can claim partition of asset of the family. The right of her daughter in co-partnery property are equal to that of a son. However, other female members, like other than daughter, like our mother, grandmother, etc., of the family, for example, wife or daughter-in-law of a co-partner, are not eligible for such co-partnery right. So they would be only member of our JHF and HUF. The relation of a HUF does not arise from a contract but arise from the status. There need not to be more than one male member or one female co-partner with effect from 6 September 2005. Before 6 September, we do need at least two male member of the family to create a HUF. But on or after 6 September, now we need only anyone, two male member of the family, two female member of the family, one co-partner and one member can create an HUF. So the minimum requirement is now one co-partner and one member can create an HUF. The Income Tax Act 1961 does not indicate that a HUF as an assessable entity must consist of at least two male members or two co-partners. So now it does not require. Now only one co-partner, and that could be a male or female, plus one member. They can create HUF. Under the Income Tax Act, Jain undivided families and Sikh undivided families would also be assessed as Hindu undivided family. So let me tell you, technically, Jain is a separate religion and Sikhism also a separate religion. They are technically not Hindus. This religion is different from Hindu, but for the purpose of Income Tax Act, for the purpose of HUF, if there is a Jain family, they will also regard it as an Hindu undivided family or joint Hindu family. So if you live in a Jain family, still, if you are a co-partner, you can ask for partition. So technically they are having different religion, but for the purpose of JHF and HUF, they would be treated as equivalent to Hindu, Jain families and Sikh families. Okay. Now, schools of Hindu law. Let me explain you this concept with the help of a diagram. So, if we talk about joint Hindu family or Hindu undivided family, there are two classes of joint Hindu family or Hindu undivided family. Either it would be a Daya Bhaga joint Hindu family or Hindu undivided family, or it would be Mitakshara joint Hindu family or Hindu undivided family. So if you are residing in a Hindu family, so either it would be a Dayabhaga Hindu family or a Mitakshara Hindu family. So these are called school of law, or you can understand it like types of HUF or JHF. Now, what is the difference between joint Hindu family and Hindu undivided family if belongs to Dayabhaga or Mitakshara? So if you live in a Dayabhaga Hindu family, so let me explain you how it forms. Suppose in a Hindu family, there is only one person exists. Suppose Mr. A is there. He has no brother, no sister, etc. Just assume Mr. A is a single person in a family. So until he would be a single person, whatever he will earn, that is going to be treated as an individual income. We have discussed this definition of individual in last class. So because if Mr. A is single and whatever he will earn, that is going to be taxed as an individual income. For creating HUF or any other person, we need to at least 2 or more members required. Clear? So if you are in a Dayabhaga Hindu family and if you are single, you would be treated as an individual, not as a joint Hindu family, not as a Hindu undivided family. Understood? Now suppose Mr. A gets married and wife comes into the family. Now there are two members, one co-partner and one member. But if you falls under Dayabhaga Hindu family, then you cannot create HUF with wife. At the time of marriage, you cannot create HUF. So for the purpose of Dayabhaga Hindu family, there must be still two co-partner required. One member and one co-partner cannot create HUF. Now in this family, suppose S1, S2 takes birth. Son 1 and son 2 takes birth. So now in this family, there are four technically members in the family, out of which three are technically co-partner and wife is technically member. But they still cannot create HUF. Now, Dayabhaga family, the concept says, until father dies, they cannot create an HUF and they cannot ask for partition. We have discussed that if you are a co-partner, you can ask partition anytime you want. But let me tell you, if we live in a Dayabhaga joint Hindu family, in that situation, until father dies, the co-partner cannot demand partition or even they cannot start a business as Hindu undivided family. They will remain only joint Hindu family. So to create a HUF under Dayabhaga School of Law, until father dies, they cannot create HUF, they cannot demand partition. So in this situation also, no partition, no HUF can create. So S1, S2 needs to wait until Mr. A expired. So in this, you can see we have Mr. A, wife, and son 1 and son 2. So they are just a joint Hindu family, no partition possible, no business can be run as an HUF. They can run a partnership firm, they can run a company, but they cannot create HUF. Suppose Mr. A dies. Now in this family, there is wife, that is technically mother of S1, S2, and S1, S2. Now they have option. They can create an HUF if they want, or even if they want, they could ask for a partition. Who can ask for partition? S1 or S2. So the power of creating an HUF or the power of demanding a partition would arise under Dayabhaga School of Law when the father expires. If father does not expire, you cannot demand partition, you cannot create HUF. Now, suppose S1, S2 also get married. And in this family, S3, S4. This is son 3, son 4 of S1, S5 or D1, daughter. This is children of S2 and of course wives also. So now you can see in this family is 1, 2, 3, 4, 5, 6, 7, 8, 9 members are there. But S3, S4, S5, D1, they cannot be the part of this HUF, even including wives. They cannot be the part of HUF until father expires. So S3, S4, can be the part of HUF when S1 expire, or S3, S4 can demand partition when S1 expire. In the same way, S5 or D1 can demand partition when S2 expire, or they could be the part of HUF when S2 expire. So the Dayabhaga school of law depends upon the death of father. If the death of father happens, only in that situation, their children can ask for partition, or they could be the part of HUF business. Understood? Now, Mitakshara is just opposite. So, Dayabhaga is based on death. The concept is connected with death, and Mitakshara is a concept which is connected with birth. Now, the same example, if we discussed in Mitakshara, so what will happen? Mr. A was, suppose, alone. So, whatever income he will earn, that is going to be taxable as an individual. And now he gets married. So, we have discussed that in HUF, you can create an HUF if you are a co-partner and only one member is required. So one co-partner, one member can create HUF. That is not possible in case of Dayabhaga, but that is allowed in case of Mitakshara. Under Mitakshara, a new member comes into the family as a wife, so they can create HUF. But wife cannot demand partition. The partition can be done by a co-partner, that is Mr. A. So at a time of marriage, HUF can be created. Now the same example, S1, S2 take birth. And in case of Mitakshara, by birth, automatically, you became the co-partner of the property. You would be the part of this HUF business. Or if you want, you can ask for partition whenever you want. Even you are major, minor, it does not matter. If you belongs to a Mitakshara school students, listen carefully. If you belongs to a Mitakshara Hindu family, you can ask for partition anytime, even today. And the partition would take place, court will come and they will give you your right and your property partition. In the same way, if S3, S4, S5, D1 takes birth, they automatically became the part of this HUF, JHF, and any one of them can ask for partition anytime. So this is the major difference, or you can see this is the major concept of Dayabhaga Hindu family and Mitakshara Hindu family. So what is the question which must be taking place in your brain right now? You needs to know now whether do I fall in Mitakshara Hindu family or Dayabhaga. You all must be thinking this question that where do I belong? Whether I belongs to a Dayabhaga Hindu family or Mitakshara Hindu family. So you can see in case of Dayabhaga Hindu family, technically the power is with father. Until father expire, so till that the time father alive, he has the power for partition, etc. So the technical power is held with father in case of Dayabhaga Hindu family. And in case of Mitakshara, the power is distributed to everyone who takes birth in the family, who comes into that family. The person they come into the family as member, they cannot ask for partition, but they would be the part of, they could be the part of business. And the person those takes birth in this family automatically become the part of family, co-partner, they can ask partition anytime. Now the question arises, if you will ask, we will ask to the from the point of view of father, they will always wanted to apply Dayabhaga school of law, because in that case they will have the power. And if we all ask for children and other members, they will say we want to go under Mitakshara Hindu family. So the difference has been sorted in case of the state of Assam and West Bengal. Those Hindu families belongs to Assam and West Bengal. In that case, Dayabhaga school of law is applicable. In other state of our country, the Hindu families, those belongs to other state of the country. would fall under Mitakshara School of Law. So if you belongs to other than Assam and West Bengal, you are technically under Mitakshara Hindu law, and if you belongs to Assam and West Bengal, you are technically under Dayabhaga School of Law. Clear? Let me see if there's any query. Mitakshara. Very good. Kushi is saying good morning. Good morning, Kushi. Pranav is asking something. Sir, if there are three males in a JHF and only two decide to start HUF, then will the third one be the co-partner? Pranav, they will all be the co-partner automatically. But whatever business they will start, the profit, etc., would be only distributed within those two members. So they will be the co-partner of the joint Hindu family. Whatever property in that joint Hindu family, the house, land, etc. So the third person would be the equal partner of that asset. But the business they have started, that is going to be taxed as HUF, and only two those two male member needs to share the profit or loss, or whatever the business happen, whatever the situation happen in that business, they two are only responsible. But the third one would be always be co-partner in the joint family of that property, not in that business asset or business profit. Muslims cannot start HUF, of course, Pranav, because that is Hindu undivided family. So only Hindu, Jain, and Sikhs are allowed. Sir, if Muslim girl marry a male in HUF, then yes, of course, she would be a member. So those who will come as a wife in the family would be regarded as a member. The son co-partner will not get any right. Mr. Goldie Anil is asking, not get right in the property of HUF until the death of Karta, right, sir? They cannot ask for partition, correct? Sir, as a general Hindu man, what will be applicable to us? I have just explained it to you. If you are belongs to Assam and West Bengal, that would be Dayabhaga. And if you belongs to a Mitaksh, other than Assam and West Bengal state, that would fall under Mitakshara. Okay. Santosh is asking a very interesting question. I was waiting for this kind of question. Sir, Income Tax Act 1961 को HUF, JHF को इम्पोर्टेंट क्यों दिया गया है? संतोष, आपको भी कह रहा हूं और बाकी सब लोगों को भी ना, हम लॉ में कभी ये क्वेश्चन नहीं कर सकते व्हाई. वी आर स्टडिंग इनकम टैक्स एक्ट, सो वी हैव टू अंडरस्टैंड कि इनकम टैक्स एक्ट में क्या क्या प्रोविजन है, क्यों बनाया गया, ये लॉ में हम क्वेश्चन नहीं कर सकते, ना ही वो हमारे कभी सिलेबस का पार्ट होता है. तो आपसे कोई कभी ये नहीं पूछेगा कि ऐसा क्यों है. तो क्योंकि भी रीजन होते हैं, सबके लॉजिक है, बट हमारे सिलेबस में क्यों डिस्कस करना अभी पॉसिबल नहीं, बिकॉज इट विल कंज्यूम अ लॉट ऑफ टाइम. तो आपसे कभी पूछा भी नहीं जाएगा किसी क्वेश्चन में कि बताइए HUF का नाम HUF क्यों है, बताइए पर्सन में ये 8 ही लोग क्यों है. सो वट एवर एक्ट वी हैव टू अंडरस्टैंड एंड वी हैव टू फॉलो इन द सेम वे. जैसे एक रूल होता है कि आपको जब ड्राइव करना है टू व्हीलर तो हेलमेट लगाना है, ये रूल है, गवर्नमेंट का लॉ है. आप गवर्नमेंट को बिना, अगर आप हेलमेट के जाते हैं और आपको पुलिस पकड़कर चालान करती है, तो आप ये नहीं कह सकते क्यों चालान हो रहा है, मैं क्यों हेलमेट लगाऊं. मेरा सर, मेरी एक्टिवा, मेरा टू व्हीलर, मेरा एक्सीडेंट होगा, मेरी फैमिली रिस्पॉन्सिबल, आपको क्या दिक्कत है, मैं क्यों हेलमेट लगाऊं. सो आपका क्वेश्चन करेक्ट है, बट वी कैन नॉट टेक दैट काइंड ऑफ क्वेश्चन, बिकॉज इफ वी गो इन टू दैट क्वेश्चन, that would consume a lot of time. So the provision we need to understand, the Q concept, the Y concept is outside our purview. Okay. Next is Meenu is saying understand. Saipa Virali is saying, sir, can you once sum up everything in short, whatever you have taught till now, so that everything will be clear? Look, these classes on YouTube, Saipa, you can go back, you can watch these classes on 1x, 2x, so that would be kind of revision. If we try to sum up each and everything, that will again consume our time, and we have a specific time duration in which we have to complete the topic and chapter. Okay, Mohammed is asking a good question. So what if a son daughter is adopted instead of birth? Will he, she would be a member? They would be a member. They cannot be the co-partner. Okay. Mustafa is saying, sir, basically in their bhaga, co-partner asks partition by death of father and in Mitakshara by birth. New children, so they become partner, co-partner, but in both wife cannot co-partner, only Mr. A become co-partner. Absolutely right, Mustafa. Good explanation to understand. So in Dayabhaga, only co-partner can ask partition after the death of father. Under Mitakshara, any children, any co-partner who takes birth in the family can ask for partition. Suppose in a Mitakshara, a child takes a birth and after 1 year or 2 year, instead of saying Papa, Papa, he said partition, partition. So the partition could be there. Okay, so jokes apart, but yes, by birth they get the power to ask for partition. Jaya Jaskranjit Kaur is saying thanks. इसमें doubt था जो अब clear हो गया. That's why we are here. Sir, is it possible that someone from other state can make Dayabhaga HUF? No, it's not allowed technically. Mrs. Indrani is saying, after marriage, will a daughter get a partition right? After marriage, daughter can ask partition in her father's joint Hindu family anytime. But in the husband's HUF or JHF, she has to wait until any other co-partner of her husband JHF would ask for partition. But if the partition takes place, the female would get his equivalent share. Sir, can any member be made a co-partner by the will of the Karta? No, that's not possible because it's a right which can be acquired only by birth. In Dayabhaga, Iswarya is asking, what if Mr. A has two daughters instead of S1, S2? It does not make any difference as we have discussed on or after 6 September 2005. Now, son and daughter is exactly equal right and duties under a HUF or JHF. So that would remain the same. Okay. Kuldeep is saying if any member in these two states can ask or apply for Mitakshara. No, it's not possible because we cannot violate the law. So, sir, Mustafa is saying in both daughter can be co-partner and if she becomes wife, she only become member. Absolutely right. She would be the member in husband HUF. Okay. Okay. So all queries has been sorted. Okay, moving ahead. So we have the provision. The difference is specifically mentioned over here. So we are having School of Hindu Law. You can see the Dayabhaga School of Law in West Bengal and Assam. Other state belongs to Mitakshara. The difference has been explained over here. I have described that difference with the concept and with the diagram. So you can read these points as a difference right now. Now, HUF definition has been done, and we are moving on to the other definition of person. Like individual, we have covered. HUF was the most technical and a new concept for all of you. And individual also. Now, the definition of like company, partnership firm, etc. They are very general definition, and you already aware about what is the meaning of partnership firm and company. So, for all purpose of the Act, company has much wider connotation than that under the Companies Act 2013. Under the Act, the expression company means Indian companies, any body corporate incorporated by or under the law of the country outside India. That means foreign companies, also companies under income tax, or any institution which has been declared by CBDT to be a company. Now, the company is having other class, like we have domestic company and foreign company classification. So domestic company means an Indian company. So all Indian companies are automatically domestic company. All Indian companies are domestic company, as well as or any other company that has made necessary arrangements to declare and pay dividends, including those on preference share within India and subject to income tax under India. That is also going to be treated as domestic company. So this is for your reading purpose, for your homework. Kindly go through with the definition of domestic company, formation, registration, general term. You can see the diagram also. Like domestic company means all Indian companies are domestic company, and other than Indian company, those who fulfill this condition for declaring and paying dividend within India, those will also be regarded as a domestic company. What is foreign company? Which is not a domestic company, would be regarded as foreign company. Why do we need to understand this classification? Because the rate of taxes for domestic company is different and the rate of taxes for foreign company is different. Okay. We will see that in rates of tax topic. Then we have the classification widely held company and closely held company. So widely held company is technically a company in which public are substantially interested. Generally, we called it public company in normal sense, but under income tax, that has been regarded as widely held company. Those company does not widely held company, those are called closely held company. That's technically means private company. So this is also for your reading purpose. Kindly go through the definition. If there would be any problem, you can ask me in the next session. We will discuss it. So because I want to focus on more technical topics, which are new for you. And these are just definitions, so you can go through with these definitions. Now the definition of partnership firm. Individual was the part of person definition, HUF, then company having classification like domestic company and foreign company. Now we are having definition of firm and LLP both in this category. The term firm, partner, and partnership have the same meaning. Again, you already know what is the meaning of partnership firm. Already, I believe you have gone through with this definition in foundation. So kindly read it yourself. Same definition as per Partnership Act 1932. Now, association of person. This is new, and body of individual is new definition. So that I am going to explain to you. When person combined together for promotion of joint enterprises, they are assessable as an AOP. If they do not in law constitute a partnership firm. In a very short diagram, we can understand what is the meaning of AOP, association of person or body of individual. So suppose if there are Mr. A, B, and C. They have decided to start a business. Any business. Started any business. But they just decided to start this business, but do not form a partnership firm. Do not form a company. They do not form a LLP, etc. They just discussed verbally or on a simple paper that we will start a business, we will share the profit equally, etc. But they did not register this business anywhere. So whatever income they will earn, so now this is the income and they are the three owners of this income. The ratio has been decided, but there is no legal documentation. They did not register this business anywhere. So they have started a business for the profit motive, but they did not register it as a partnership firm or as a HUF or as a company or as a LLP. No legal constitution. So that would be called association of person. The word says association of person. So if more than one person associated to earn any income without any legal formation, That would be called association of person. Very simple definition. So if they do not in law constitute a partnership, in order to constitute an association, person must of course join for a common purpose or action, and their object must be to produce, of course, income. It is not enough that the person receive the income jointly. Co-heirs, co-legatees, co-donees joining together for a common purpose or action would be chargeable to an as an AOP. Even the very good example and very simple to make you all understand are like joint ventures. In joint ventures, suppose if there are two companies who comes together for a specific contract, they decided this contract we will complete together. Only for this contract we are together without any legal formation of partnership firm, etc. We will divide the profit in the specific ratio. So that income, what they will earn from that joint venture, they would be constituted or taxed as association of person. Okay. So example is also there. You can go through it. Now the next is body of individual. So if you only receive the income, if you do not have intention to earn income, but if the main intention or the main work is to receive any income, that in that case you could be treated as a body of individual. Suppose there is Mr. F, he has a property. Out of that property, the annual rental income, suppose 20 lakh rupees. Okay. Mr. F has 4 children. S1, D1, D2, D3. They all are, suppose, minor till now. Now Mr. F made a will because he know that he will not survive longer. So he made a will and he appointed A, B, and C as the caretaker of this property and the income after his death, till the time his children become major. So A, B, C is a caretaker till S1, D1, D2, and D3 becomes major. So they will take care of the property and the income. They will distribute a certain amount of income for the maintenance of S1, D1, D2, D3 for maintenance purpose, for their study, etc. They will use this income and the other income is going to be saved as per the will contract. Now in this case, technically, who is going to be the body of individual? Can you tell me who is going to be the body of individual? Are S1, D1, D2, D3 are body of individual? Or A, B, C is body of individual? Who would be treated as body of individual? Let me see, there are a lot of answers. A, B, and C, Kuldeep is saying. Well done. Riddhi when is saying ABC. ABC, of course, who is Meenu is saying. Mr. ABC is by Harivansh. Well done, Harivansh. Adil is saying ABC. I believe everybody has given the correct answer. Wi-Fi from Hi-Fi to all of you. Shamli is saying ABC. Correct. Navneet also saying ABC 3 times. Okay. Mr. Linga has a question. If in Hindu family, father died, 2 living daughters and wife, whether daughters are co-partner in the family as both daughters are married and one daughter has one male child. So what is the question between in this, Mr. Linga? I didn't understand your question. You are just gave me the situation. What do you need from me in this question? ABC, correct. So the ABC would be treated as body of individual. So they are not technically the real owner of that income. They are just the caretakers. They would be regarded as body of individual. Whatever amount of tax liability would arise on this 20 lakh, they would pay out of this income. Of course, they are not going to pay the tax liability from themselves because they are the caretaker of income. So suppose the tax liability on 20 lakh is rupees 1.5 lakh. So out of this 20 lakh, they will pay 1.5 lakh tax, and balance would be distributed for the welfare of minors, and the rest amount would be invested as per the bill. So to create a BOI, there must be a legal agreement. There would be a registered agreement. You can see in case of AOP, there is no registered agreement is there. But in case of BOI, there must be a registered agreement. And the intention to earn income must not be there. So ABC does just like a caretaker. They do not have any purpose to join together to earn income. There could be income, but the purpose is not to earn income. The motive is not to earn income. Whatever amount of salary they will receive for being a caretaker, if they receive any amount as a caretaker as their income, like salary, whatever, on that income they will pay tax as an individual. But on this 20 lakh rupees, they would be treated as body of individual. So if you will see in case of AOP and BOI, there are one major difference, that AOP is unregistered organization in which two or more person comes together for the object to make income. It's like a proper business. But the difference is it is unregistered. In case of BOI, that must be registered, and the main intention is not mandatory to earn income together. They are there to receive the income, but the main intention is not to earn income generally. So that is the definition of AOP and BOI, who merely receive the income jointly and who may be accessible in like manner to the same extent as the beneficiary individual. So they have the same responsibility of paying tax, etc., as the legal owner. But technically, they are not the legal owner. Co-executor, co-trustees, etc., are the examples of body of individual. In case of body of individual, that could be only individuals can be there, because the word says body of individuals. The definition says, and individuals mean human being. A partnership firm cannot be the part of BOI. A company cannot be the part of a BOI. But in case of association of person, this is also a difference. In case of association of person, the word is person. So that could be individual, two companies, one partnership firm, one companies, anyone could be the part of association of person. But in case of body of individual, only individuals could be there. So there are difference between AOP and BOI. So you can now read it because we have explained the concept. Local authority, very simple definition. Like government, those department, those work on central level, called central government. Department works at state level, would called state government. And department works on local level, is called local authority. Like panchayat, municipal corporation, city level, those work, those will be called local authority. So you can read it now. Artificial judicial person. It does not have any separate specific definition of its own. All other person is having their own definition. All other person. Like we know what is the meaning of individual, like we have discussed what is the meaning of HUF, firm, company, AOP, BOI, local authority. And AJP says those does not fall in the above 7 categories. And if chargeable to tax, if they are earning income, they would be called artificial judicial person. Even God have been included in this. So artificial judicial person are the entities which are not natural person, but are separate entities in the eyes of law. This is the residual category, could cover all artificial person with a juristic personality not falling under any other category of person. Cities, bar council, universities are some important example of artificial judicial person. So that was the definition of person. Now the definition of India is here. You can go through it. What the meaning of India? The definition is belongs to the some territory of India, water, sea, etc. We have certain territory. You can go through it. The most important definition or a very, very interesting definition, which is going to be the multiple time you're going to read this word under income tax, and that is previous year in assessment year. Let me explain you with the help of a simple diagram what is the meaning of previous year and assessment year. So, previous year and assessment year. So, for the purpose of your attempt, which would be in May 2026, so we are discussing the previous year provision, and the previous year for your examination is 25-26. The assessment year would be the next year of previous year, always. And that is 2026-27. But we need to know what is the meaning of previous year and assessment year, what they denotes, what they explain, what is the basic understanding of these concepts. So when I say previous year is 25-26 for your examination, 25-26, that means I am asking you to cover this duration starting from 1st April 2005 and ending on 31st March 2026. That is the time duration which will be covered if I am saying your previous year is 25-26, and 26-27 will start after previous year, and that would be 1st April 2026 till 31st March 2027. Okay, this is the duration we are talking about, but still we did not understood what is the meaning of previous year. So now the meaning is income tax says whatever income you earn in this duration from 1st April 2025 till 31st March 2026, whatever income you will earn, suppose you earn 30 lakh rupees. So you do not need to pay any tax on this income within this year. If you are earning any income from 1st April 2025 till 31st March 26, then you do not need to pay any tax on this income in this year. So this is called your earning year. The year in which you earn income, that is your previous year. Fine. Abhi recently what year is going on? Technically we are in this year. So whatever income I am earning in this year, suppose I earn today 25,000 rupees. Suppose I do not need to pay any tax on this 25,000 rupees till 31st March 2026. So when do we need to pay tax? The tax on this income, the tax on the income we earn in previous year need to be paid in next year. That is called assessment year. Assessment means checking, verification, assess करना, किसी चीज को assess करना. So the tax would be assessed in the next year, and that is called assessment year. So on this 30 lakh rupees, we need to pay tax, and that is going to be paid in the next year. That is called assessment year. Whether I earn 30 lakh, whether I earn 30 crore, I need to pay the tax on that income in the next year via return filed, etc. And that year would be called assessment year. So now you understood what is the difference between previous year and assessment year. So we can say this previous year name, we can also say it's like earning year. Okay. Forum 3 is having a question on query portal. I'm going to answer it. Forum, just give me complete this thing. So previous year means technically earning year. In a simple language, I can make you understand what is the meaning of previous year, the year in which you earn income. That's called earning year. And what is assessment year? I can say that could be called a taxing year. Do not write it in examination. Okay, this is just for your understanding. In a layman, if you want to make someone understand what is assessment year, what is previous year, so you can tell someone, your relative, your parents, your friends, those are not uh, studying this topic or this course, or they do not have knowledge of income tax. You can say the year in which you earn income, a full 1 year from April till March. Whatever income you will earn, that is called your previous year. That is your earning year, and the tax need to be paid in the next year. That is called your taxing year, and that is technically assessment year. Okay. So whatever I have earned, this 30 lakh rupees is 30 lakh rupees. Previous year is 25-26. And this 30 lakh rupees assessment year is 26-27. Now tell me one thing. If I earn 30 lakh rupees in 25-26, and now in the next year 26-27, Mr. A earn 40 lakh rupees. So we earn income practically every year. So now I have earned 40 lakh rupees in next year, suppose 26-27. So now what would be the previous year of 40 lakh rupees? Now I will say previous year of this 40 lakh rupees would be 26-27. And the tax, when I need to pay the tax of this income, that is going to be paid in next year. That is 27-28. So this 40 lakh rupees assessment year would be 27-28. So if I earn any income in 27-28 now, in the next year, suppose 50 lakh. So that 50 lakh previous year would be 27-28, and the assessment year would be 28-29. So accordingly, this concept 2025-26 would also be the assessment year of some year of income. On which year of income do I need to pay tax? In 25-26. So 25-26 is the previous year for the income which has been earned in this 25-26. But 25-26 would be a taxing year also for the income whatever we have earned in 24-25. So technically, suppose if I have earned 15 lakh rupees in 24-25, so that previous year would be 24-25 and the assessment year would be 25-26. So currently, if I am paying tax, so on which year income I am paying tax? I am paying tax for 24-25. Whatever I am earning in this year, I am going to pay tax in the next year. That would be 26-27. So now you understood the meaning of previous year and assessment year clearly. Let me see. A lot of chat boxes there. Before that, Forum Khatri was asking something. Sir, if a girl is born in other part of India except West Bengal and Assam and gets married in West Bengal, then which law she have to follow? So because the family in which she takes birth is other than Assam and West Bengal. So for that family, Mitakshara would be applicable. That means she can ask for partition from her father's JHF anytime. But because she got married and now she's in Assam and West Bengal in her husband HUL, she would be a member, and for that membership, she would be treated as Dayabhag. Okay. Forum is asking meaning of co-heirs, co-legatees, and co-donees. Co-heirs means suppose there is Mr. A who is having property of 50 lakh rupees. So after his death, the remaining member of the family, suppose his children is A, B, and C, they would be become the legal heirs. And because there are more than one, so they would be called co-heirs. In the same way, co-legatees and co-donees. If you are receiving donation, and the receiver of donations are more than 2 or 3%, they would be called co-donee. You can Google it because it's a general terms. Your query has been answered by me. Okay. Next, now see what are the queries on this chat box. Nagar Nigam is a local authority, of course, Mr. Neeraj. So next is again Mr. Anil Golti is asking, Sir, any reason for this structure of previous year and assessment year? Everything has a logic and reason. But as I said, we cannot discuss the reason that why it is so. Why this is for 12 months. Somebody can ask why it is not from 1st January, why it is from 1st April. When the new year we celebrate from 1st January till 31st of December. That is called calendar year. Why we are following April and March? Why it is for 12 months? So please do not ask these kind of questions because it will consume a lot of time and it would not be uh, we can say useful for your examination. Okay. Okay. Next is Riddhiven. A joint Hindu family from West Bengal, from HUF outside West Bengal and Assam. That's why we have written Riddhiben, the belongs. Where do you belong? So if you belong to West Bengal and suppose there could be a question, suppose a family lives in a West Bengal and their Bhaga School of Law is applicable. And the leader of the family, father, works in a government organization. After some year, he got a transfer. Now he got transferred from West Bengal to New Delhi because he's a government employee or a private employee, so his job has been shifted to Delhi. So from West Bengal, now the whole family has been shifted to Delhi. So whether the school of law will change or it will remain same. That's why I have written over there from where you belongs, not you reside. So you will still belong to West Bengal because you, your ancestors, your grandfather belongs there. So the Dayabhaga School of Law will continue. Understand? So where you registered your HUF does not matter. Where you belong as a joint Hindu family, according to it, your Hindu family provision would be applicable. Next is Kuldeep is asking if salary of March 2025 gives on 1st April 25, then assessment year 25-26, salary is taxable on due basis. That we will discuss in salary topic. So if it has been due in March, it would be considered as still your March income. So the previous year income would remain 24-25. Okay, that you will understand in salary chapter or other heads of income when we will discuss it. So next is Mustafa is saying AOP is like two organization or person to make partnership to do some work and unsung income consideration, and BUI means individual can be joined to just forming type of trust to maintain some work, not merely receive consideration and not mainly want profit. Very well done. ये बच्चा बहुत होशियार है. Very good, Mustafa. Well done. Your queries are really up to the mark. The way you are explaining yourself, the provision, very nice. संतोष इज सेइंग सर शॉर्ट वे में हिंदी में एक्सप्लेन कर दीजिए कुछ चीजें समझ नहीं आ रही संतोष यार दिस इज अ प्रॉब्लम विद दैट we are having medium of English. If I'll start explaining in Hindi and English, that again is going to consume my time. I can explain the whole chapter in Hindi also, but that is not permissible. You can ask your query. आप अपनी query मुझसे पूछ लो हिंदी में, मैं उस query को हिंदी में बता दूंगा, but topic हम हिंदी में नहीं कर सकते. I'm so sorry. That's not the procedure. Okay, next is just Karanjeet Kaur is asking, Sir, income section 224, please explain. Yes, that will come in our topic. When the topic will come, I will explain it. Okay, just stay with me. I will explain each and everything. Okay, understood. We will discuss concept of income. Do not worry, Pranav. Just wait. That will be covered in today's class. Chandan is saying ABC. Okay, Prajapati. Prajapati is saying when a family belongs to Maharashtra and their child born in Maharashtra, but now due to some reason they shifted permanent to West Bengal, and now which school of law will apply to this family? I have explained this question. If you shifted, still you will fall under Mitakshara School of Law. And the school is applicable technically for 3 generations. After 3 generations, if you have remained in that Assam or West Bengal, the school could be changed. But for 3 generations, the school would remain the same. Adit is asking, sir, why we cannot file ITR in April and May? Why it can start on June first week? That is a different because the government software has not been updated. We could file ITR from April and May, but the software issue is there. So that is possible when only software starts working. Okay, Santosh queries. What is continental shelf, external economic zone, and maritime zone? I believe that is going to be discussed in GST topic because the definition of India has been elaborated in GST. Even if you want to understand, kindly Google it. You will understand the meaning of continental shelf, EEZ, and maritime zone. They has been defined as some specific nautical miles, like up to 12 nautical mile, there is continental shelf, then 24 nautical mile, and then 200 nautical miles. So that is going to be discussed in GST India definition, or you can Google it also. Okay, so definition of previous year, etc. has been done. Moving ahead. So the term assess has been defined under section 2.9. This means a period of 12 months. Assessment year would always be 12 months. After ending of previous year, assessment year would be for 12 months. Previous year would start from 1st April 2025 and it ends on 31st March 2026. But what if somebody has started business on 1st November 2025? If I start earning income, if I start doing a job from 1st November 1st November 2025, or I've started business from 1st November 25, then my previous year time would be till from 1st November 25 till 31st March 26. So for a existing business, for an old business, the previous year will start from 1st April. But if you start a new business, then your previous year will start from the day the business or income start earning initiated and but will end always on 31st March 2026. But assessment year would always be for 12 months. 1st April every year, the year in which income is earned is the previous year and such income is taxable immediately following year. That is assessment year. Assessment year always 12 months. The previous year definition, it means the financial year immediately preceding the assessment year. As mentioned earlier, the income earned during the previous year is taxable in the assessment year. Newly set up business previous year will start from the day the business or profession start and ending always on 31st of March. We have example also. A is running a business from 1993. In that situation, his previous year is from 1st April 25 till 31st March 26. And if somebody start business from 1st July 25, then the previous year will be from 1st July till 31st March 2026. Now we are going to discuss some exception of this rule. So we have just gone through with the concept of previous year and assessment year. And it say the income earned in previous year is going to be taxed in the next year. So you need to pay tax in next year. But now for this rule, we are going to read the exceptions. There are some cases in which the tax need to be paid. The previous year income tax need to be paid in the same previous year, not an assessment year, in the same year. So generally the rule says whenever you earn income, the tax need to be paid in next year. But now we are going to discuss some exceptions. So the meaning now, in the year you will earn, you need to pay tax in the same year. So if in the examination there is a question which says, explain the rule or please explain the cases in which the income which has been earned in previous year and the taxes need to be paid in the same year. So we are talking about these provisions. General rule, income of a previous year is assessed in the assessment year. Exception, cases where income of previous year is assessed in the previous year itself. So you might be thinking this is wrong. The basic rule was saying, okay, my income of this year is going to be taxed in next year. But now government has changed this rule in these 5 different circumstances. In these 5 cases, you have to pay tax of previous year income in the same previous year. So this is very wrong. This is injustice. But it is not like that. It is not injustice. This is the case, the situation demands. That's why government needs to make these kind of provision. Let me give you an example. So you will understand why we do need to do this kind of provision, why these kind of provisions are here. Suppose Mr. A, who reside in India, doing job in India, he gets an offer that you can join a new company from 1st December 2025 in USA. So he is going outside India. Now he's going outside India permanently for this job. But in India, he was also doing jobs. So the income or the salary he earned from 2025 April till the time he joins the company, suppose till 30th November, he continued his job in India in a company. And for these months, he earned 30 lakh rupees salary. So this is the income of previous year, 30 lakh rupees. Previous year is 25, 26. Now, when he go outside India, when he is about to leave India, he's going outside India, USA, he's in on board, he's in on airport. Income tax says, give us the tax of 30 lakh rupees. Please pay your tax. So what assessee will say? Assessee will say, it's your rule that the income of previous year is taxed in the next year, assessment year. So I will pay the tax on these 30 lakh rupees. I'll come back to India in the next year and I will pay the tax on this 30 lakh rupees in the next year because that is your general rule. You cannot ask tax on this 30 lakh rupees in this year because this is itself the previous year. This is the earning year. So I'll come and pay tax in the next year. And suppose income tax says, yes, okay, that is correct. You can come next year and you can pay tax. So what will happen? In majority of cases, they will not come to pay tax. And it is very, very difficult or almost impossible for our income tax department to go there and collect tax on the last year income. So because in these cases, there is a possibility that income tax department would lost their revenue. They would not be able to collect tax. So what they have decided, in these cases, we will not allow to you to go outside India until you will pay tax of this previous year income in previous year itself. So you have to pay the tax of the income you have earned in this year, only in this year. So you will see in these all 5 exceptions, what we are going to discuss, the government is not doing injustice. They are just protecting their revenue collection from being lost. So now you can see there's genuine cases. That's why it falls under exceptions. So this exception we will read. So these are 3 cases. The example I have given you belongs to second case, person leaving India. Now we will read case number 1, 2, 3, and 4 and 5 one by one. So these are the cases in which income of previous year is assessed in the same year. Exception of the rule that income of previous year always taxed in assessment year. First exception is non-resident shipping business under section 172. Suppose there is a non-resident. Now, what is non-resident? we have a specific chapter for it, chapter number 2, residential status. But for the time being, let me tell you, who reside outside India, that would be generally non-resident for us, who reside outside India. Suppose this non-resident, Mr. Z is there. He's a non-resident. He reside in USA and he deals in a shipping business. His business is shipping business. So he doing shipping business. Shipping business means he has a ship. He do the loading and unloading work from USA to India. So he carries his ship to India. Suppose this is our ship and this is our country, suppose India. So he carry goods, unload it in India and takes the freight. Suppose he carry goods, unload those goods in India and charges 50 lakh rupees from the person who is the buyer. Now, after taking 50 lakh rupees, he's going back. Again, the problem remains same. Income tax say, please pay tax in India. He will say, I will come and pay in the next year. Why should I pay in this year? And now if he gone back, probably he will pay tax. Probably he will not pay tax. And it's difficult to collect tax because that's a case of the person who reside outside India. So in that situation, government says that if you are a non-resident, carries a shipping business, comes to India, earn income, then you have to pay tax on the income you have earned in India before going back. So now you need to pay tax on the income earned in India. But the problem is this. This is the sale, not his profit. And tax need to be paid on profit. So how he will calculate profit on this 50 lakh rupees? He says, let me go back. Let me prepare my accounts, P&L, profit and loss account, balance sheet. I will find it out what is the profit I have earned from this 50 lakh rupees. And then I'll come and pay the tax. But the problem is this, if he'll go, maybe he'll not come back. So government says, don't worry, we have make a fixed percentage. 7.5%. 7.5% of this freight collection, we will consider it as your income. Fixed. 7.5% of the fixed percentage has been decided by the income tax. We will consider the profit is 7.5%. On this 7.5% profit, now whatever tax has been applicable, you have to pay that tax in India. Only then you can leave. Either pay tax or someone in India take the responsibility on behalf of you to pay tax. So either you pay tax or if someone in India takes the responsibility legally that, okay, let him go, I will pay the tax on behalf of him. And the someone who is taking responsibility should be that person who has that kind of net worth, etc., that government will accept that guarantee. So only that situation you can go back, else you would not be allowed to go back until you pay tax or made the prescribed arrangements. This is section 172, a non-resident who is carrying on a shipping business, comes to India, earn income. So before leaving India, tax is charged on such person. So tax need to be paid or such person has to make prescribed arrangements. That means someone will take the guarantee. 7.5% of the amount of freight charges earned in India shall be deemed to be his profit and income tax would charged accordingly. That was section 172. Assessment of person leaving India. We have discussed this with an example. When it appears to the AO. AO means assessing officer. So these are income tax officer. We call them assessing officer. In short, we call them AO. That any individual may leave India during previous year and has no intention to come back. So if you are leaving India for tourist purpose, for going traveling, etc., then income tax would not ask you to pay tax. But if you are leaving India permanently on the basis of your visa, it could be find out. Then you have to pay tax in the same year. Then the total income of such individual of that previous year will be taxed in the same year. Here is the example. You can go through. Now, assessment of AOP. We have just discussed the AOP, the BOI, the AJP. AOP is unregistered. So if any organization has been established as an AOP, BOI, or AJP formed for a particular event or purpose under section 174A. So suppose there is a business venture like a joint venture for a single event has taken up by any person in India, and after that joint venture, that AOP is going to be dissolved. After completion of that specific contract, that AOP is going to be dissolved. In that situation, government will say how we will be able to collect the tax, because if after dissolution, that would be really difficult to find out the owner, etc. So we will take the tax in the same year. But if it has been formed for a particular event or purpose, generally this has been made to collect the tax on the events like music concert, any show which has been organized in India, and that is a one-time show. And after that show, the organizer, the AOP is going to be dissolved. So before that dissolution, government needs the taxes. If it appears to know the AO that any AOP, BOI, AJP is formed a particular event and will dissolve in the year of formation, their income will charge in the same year in which it is formed or earned income. A detailed example with situation has been given over here. You can go for it. Case number 4, assessment of person trying to transfer his asset with a view to avoid tax. So this is like point number 2, the person leaving India to avoid tax. So we have a choice that we can leave India to escape from taxes. But there are certain cases also where we do not need to leave India. We can also avoid tax by going from one state to another state, and it would be really difficult for government to track us, to collect the tax. Let me tell you how. Suppose there is Mr. A, and in previous year 25-26, he starts selling his assets. Everything he is having, he is selling them. He has a house, he sold it. He had land, he sold it. He had car, jewelry, sold it. He are having bank account, he closing it. So technically, when a person transfer his asset and on the profit, whatever profit they earn on these sale, profit on sale of asset, there needs to pay tax. The name is capital gain tax. Now suppose you have a neighbor. You have a neighbor in your colony, and that neighbor is transferring each and everything. He sold his car, he's going to sell his house, his investment, lands, and he's just closing his bank account also. So what does that mean? How you will feel if someone you know, whether your relative, your neighbor, your friend, etc., trying to sell each and everything and shifting somewhere else. And if he transferring or he's selling his car, he does not buying any new car. He transferring his house, but he's not purchasing any new house. He's transferring his land, he's closing his bank account, but he's not opening any new bank account. So that could arise a doubt in our mind that what is happening, this is not usual. There is something unusual happens. And now suppose from the point of view of income tax, if any assessee in India, suppose somebody reside in Delhi, and he's transferring each and everything, asset, whatever he has, he's not opening new bank account, he's not purchasing new house, but he's transferring his old asset. So there could be a possibility that suppose he earned profit of 5 crore rupees on these transfer. So there would be a technical tax liability 20%, suppose 1 crore rupees. So to avoid this tax, what he's doing, he's transferring each and everything, and now he's going to shift, suppose in West Bengal. He's going to take a property on rent. He's not opening any bank account or opening bank account with some other IDs, etc. So if government will come in the next year, he transfer all these assets in previous year 25-26. Government comes and asks, okay, you have to pay tax. So what he will say? He will say, I will pay tax in next year. And in the next year, he just vanished. No property in Delhi, no traceability, no bank account, nothing. He just went another state, whether it's be a West Bengal or whether it could be Chennai, etc., any place. So it would be really difficult to income tax department to even track people in India if they do not left any way to find you, because from bank account, from properties, that could be easy to find out, but it would be really difficult. If in this case that person vanished from Delhi, then where he has gone, it's very difficult to find it out. So government needs to know, the assessing officer, the income tax wants to know what is the intention of selling those properties. Now let me tell you one thing very clearly. That is not the intention every time. If somebody is transferring their all asset, it does not means that he is having bad intention. There could be any need, maybe for any medical reason or for any other reason, he might selling his asset. He is the owner of that asset. He can sell it. Nobody can stop. But if the transfer of these asset for avoidance of tax, then section 175 will applicable. Now, the question is how we will find out that whether it is for avoidance of tax or not. So it will depend upon the case of the fact. Sorry, face of the fact of the cases. It will depend upon the facts of the cases. Assessing officer will see that whether these transfer is genuine or these intention is for avoid tax. If that is for avoidance of tax, then you have to pay tax in the same year. So if it appears to the assessing officer that any person is likely to charge, sale, transfer his asset to avoid tax on his total income, then the total income of such individual of previous year shall be charged to tax in the same year. Got it? And last is like point number 3, discontinued business. In point number 3, there was any AOP, BOI which has been formed for a particular event. So in the year it is dissolving, you have to pay the tax. Now this case is applicable for all other business, normal business also. Suppose a partnership firm who is working from last 10 years or 15 years, or in a company or any business, HUF, individual, proprietorship, whatever it is. So all businesses, those are working normally. So in normal case, what is happening? We need to pay tax in the next year. But if any normal business is going to dissolve in the same year, is going to dissolve in any year. Suppose any partnership firm working from last 10 years, but it decided to discontinue its business. It's decided to dissolve in current year, previous year 25-26. So if any business is going to be dissolved in the previous year, then the income which has been earned in the previous year 25-26 need to be paid the tax on that income in the same year. Because again, once firm dissolved, in the next year, it's very difficult to find out different partners and to collect tax. So that is the case. 5th point, discontinued business. Let me see if there's any query. Then we'll move on to next topic. Pranav is saying, asking, sir, in financial year 25-26, if a person is leaving India on 30th March 26, then when will his income be assessed? He cannot leave without paying tax. He cannot leave before. Look, he has to apply for visa, and visa will be granted only after taking the tax collection, etc. Without that, you cannot have the visa if you are shifting permanently. So it's not that simple that you will explain to the government that I am leaving on 13 March and that's it. No, it's a whole long process to get visa. if you are transferring or shifting outside India permanently. Example of transfer property to avoid tax. I've just given you the example how to avoid property. Suppose I am transferring my asset or my neighbor is transferring asset. So that could be a reason. But it is for avoidance of tax or not, that will depend upon the facts of the cases. Aditya is saying, sir, if someone does I don't know what that means, Aditya. It's a new word for me. Gruha, I don't know what it is. Next is how AO find these assessee, because when you transfer your property registry, when you do the registry, the details of registry is going to the income tax department. When you transfer a car, the sale of car details going to the income tax department. There are multiple transaction, whatever you do. When they ask Aadhaar in every transaction, what do you think? Why they are asking for Aadhaar or PAN number? Whenever the PAN number required, even for opening a bank account or closing your bank account or withdrawing a certain amount from your bank account, you can see they ask for Aadhaar and PAN numbers. Technically, what bank is doing with your Aadhaar and PAN number? No, they do not need it. Technically, bank or other department transfer their Aadhaar and PAN to the income tax department directly. So they know a lot of thing about you, which you do not even know that you has been tracked. Okay. Sci-fi king. So in income tax, there is no such thing called as current year. Yes, there is no word like current year. There's only previous year and assessment year. Okay. Either bankrupt or leaving the place. Mustafa is saying first to pay tax on income which they earn in India. If they're leaving India, then I have to pay third scenario. Yes, BOI. Yes, exactly correct. Very good. Next is promoter of one person company. One person company is a company. One person can run it, but it would be regarded as a company. So tax would be applicable as company provision. Meenu is saying, sir, transfer his property to his wife and leaving India for job. Is still liable to pay tax in same year as business is still going on the name of her wife, so she can pay. Yes, if there's somebody else who takes the responsibility of paying, if business has been transferred to the wife, then there is no need to pay taxes on leaving India. नीरज सर उस 50 लाख पे डायरेक्ट टीडीएस नहीं लग सकता क्या? टीडीएस concept is different because TDS we cannot discuss at the time of first chapter. You must have read the income tax before, or you must be in some practical knowledge of TDS. TDS concept and TDS would be applicable only with the rate of 10% something, and the tax collection could be rate higher. So TDS concept is not applicable on there. Harivansh is saying in a shipping business, the ship takes longer time to deliver of goods. How can be income taxed on for that period when he comes in India thrice? So when he will be liable to pay before leaving India, per visit you have to pay tax. If you are in a shipping business and your ship comes to India, unload the goods and takes the freight, then before leaving India, you have to pay tax of that trip. Again, if you come twice or thrice, at every trip you have to pay the tax on the exact trips or the that trip you have made in India. Golti is saying simply leave from department, right, sir? How will the department catch the shipping business guy, sir? Like it's very tough to catch him, right? How it's difficult, Mr. Anil? From the port, you cannot go back until you will pay the taxes. So it's not that simple. You need the certificate from leaving the port, like you need visa from leaving India. So they will get those visa permission or certificate of leaving port. Until you have not cleared your tax dues, you cannot go anywhere. Anything else? Shri Kumar, pen and Aadhaar are both the tracking instrument. Yes, absolutely. You even do not know what information you have already shared with the income tax department. They know each and everything. Even if you are paying your restaurant bills more than a certain amount, that information goes to income tax department. Yes, visa decided. Generally, you are going for visit, traveling, or permanently outside India. Okay, so all queries has been done. Now, this is undisclosed source of income. So there are certain cases in which if you do not able to explain your income sources, that is going to be regarded as your black money, and that is called undisclosed source of income. And the black money concept has been explained in 6 different categories. General rule, this is also an exception of a general rule. One exception of general rule we have discussed earlier, that previous year income is taxed always in assessment year. But there are 5 exceptions. We have already gone through with it. Again, Mr. अरसल खान, मुझे लगा था कि किसी ने ये वाला क्वेश्चन क्यों नहीं पूछा अब तक. Mr. Arslan Khan is asking, Arslan, okay. Good morning, sir. Sir, I have a doubt that why Daya Bhaga school is in West Bengal and Assam. देखो क्वेश्चन तो you have raised correct, but again I have asked you that if I will start answering why, then we are not able to read the provision or complete our chapter. There is some reason, Arslan, there is some genuine reason why West Bengal and Assam has been chosen for Daya Bhaga. There definitely could be a reason, no? Because how it's possible that these 2 states have been considered for the purpose of Daya Bhaga and why all other states under Mitakshara. So there is a reason, but I don't have that much time that we are going into the reason to explain. You can Google it and maybe you will find it out. So there is some reason because uh, practically in Assam and West Bengal, in practically father runs the family. In Mitakshara, generally we do not listen to our grandfather, generally not also father. Practically, we are talking about. Under West Bengal and Assam family, they are very rooted to their conventional society, or you can say family. So the family actually run by the grandfather and father. So that's the reason, but you need to Google it a lot because it is not that simple. It's a whole story behind it. Fine. So moving on to the next exception. So we have discussed that previous year is 25, 26 and assessment year 26, 27. And I have also explained that previous year is also regarded as earning year. Yes. But now suppose take a case in which an assessee earned 50 lakh rupees in previous year. In 25, 26, they earn 50 lakh rupees in previous year. Clear? But out of this 50 year, he only disclosed to income tax department. After this diagram, we will take a short break. Okay. So out of this 50 lakh, he only disclosed to the income tax department. In assessment year, he said to the income tax department that in the previous year, I only earned 40 lakh rupees. So technically he earned 50 lakh rupees, but he explained to income tax department to pay tax in assessment year that I have earned only 40 lakh rupees in the previous year 25, 26. So I am going to pay tax on 40 lakh. So that is called your declaration of liability. Whatever you will declare to the government, that would be your declaration of liability. We will assume, yes, this much income you have paid, and he has paid tax on this 40 lakh. So it's not that easy to the income tax department that they will find, okay, here you have escaped 10 lakh rupees income. You have just escaped 10 lakh rupees income. You have just explained that I have earned 40 lakh and I'm going to pay 40 lakh. They will take, okay, give us the tax amount. So now you'll see out of this 50 lakh rupees in the previous year, you have explained to the government that I have earned 40 lakh rupees. So for the purpose of 40 lakh rupees, the previous year would be 25-26 and the earning year also would be called 25-26 because you have told government that I have earned 40 lakh rupees in previous year 25-26 and the assessment year of course would be 26-27. This 10 lakh is not in the picture yet. Suppose after 5 years or 6 years, department find out that you have escaped income of rupees 10 lakh and department find out this income, suppose in the year 2031-32, that you have escaped income of rupees 10 lakh of previous year 25-26. Now government find out this income in 31-32. So the previous year for 10 lakh rupees income would be now 31-32 in the year income tax department comes to know. But what would be the earning year? The earning year would remain same for this 10 lakh rupees 25-26. So now you'll see the previous year and earning year is not same in case of black money. This is called black money. In case of white money means on which we pay tax. In case of white money, previous year earning year will remain same because you will say, okay, I have earned 40 lakh rupees in previous year. So my earning is 40 lakh rupees for the previous year 25-26. So the earning and previous year will always remain same in case of white money, or we can say on the money on which we have paid tax. But in case of black money, the previous year would be that year in which government will find out your income. So that could be 31-32, 30-31, 28-29, whatever year, in which government will find it out. But because the earning year was the same, because 50 lakh has been earned, out of which 10 lakh we escaped, but the earning year would remain 25-26. So in case of black money, it will always that previous year and earning year would be different. So this is also an exception. If there is a question, explain the exception of the rule when previous year or earning years are same. So previous year, earning year are same in case of white money. An exception is black money cases. So we have black money certain cases in which you can see, I've explained it, cases where earning year and previous year is different. In case of white money, they are same. And in case of black money, they are different. So these are 6 cases of black money. And in all these cases, the earning year and the previous year would be different. Okay, so I guess it's time for a short break. So Mr. Manish, can we have a short break? Okay, thank you. Okay, welcome back everyone. I believe you must have your coffee, tea, etc. So we were discussing the provisions of exception in which previous year and earning year would be different. Let me see if there is any query. Yes, for black money, you have to use the word undisclosed income. Now, Neat is saying, but sir, if income is less than basic initial limit, then any tax liability of black money, no, why that would be a black money? If your income is less than the exemption limit, so that is not going to tax liability, there would not be any tax liability. So that could not be your black money anyhow. So what rates of tax would be applicable in case of black money? There is specific rate, 78% tax rate would be applicable. There is no assessment tier concept in case of black money. The recovery of tax, penalty, interest are separate provisions there. There is no assessment year. There is only previous year and earning year. Black money does not have any assessment year kind of concept. The recovery would be uh, in a specific rate of 78% and depending upon the fact of the cases. Next is, there is no black money Saipa. Okay, I have explained it. Assessment year, no assessment year for black money. Pranav, we have discussed how assessment year and previous year earning year. The year in which you earn income, that is called previous year. So that is previous year earning year. And whatever amount of income you have explained to income tax department for paying tax out of that previous year income, that would be called assessment year. So previous year earning year would be same for that income on which you have paid tax. That means white money. But if you did not pay tax on any income, and if later on department find out that income in after 2 year, 3 year, or 4 year, so in the year in which department will find out that income, that would be the previous year, and of course the earning year would remain the same. I have explained it with the help of example. You must have gone through with that. Okay, so now the cases of unexplained income is here, undisclosed income. First is cash credit. I believe you must have downloaded the notes also, and if you will see at the end of the notes, there are charts for this topic also, and the topic we have discussed before that is also. So there are example and chart also regarding undisclosed income and the exception of the rule when income of previous year, that shipping business, etc. So you go through with chart also. I have prepared exclusively for you. So where any sum is found credited in the books of an assessee maintained for any previous year, an assessee has no explanation about the nature and source thereof. The explanation offered by him is not in the opinion of the AO satisfactory, then such sum may be charged to income tax as the income of the assessee of the previous year. So if any cash entry found in the books, register, etc., and you are not able to explain it from where that entry has came, then department could treat it as a black money. Unexplained investment. Suppose in the balance sheet, you have shown investment zero value for 31st March 2025. But when income tax came and searched at your house or business premises in the year 2930, they found investment proof like property papers, share purchase, etc. And the date of share purchase or investment belongs to this previous year, 24-25. They have found that the investment paper belongs to 24-25 rupees, 40 lakh rupees. And the balance sheet, you explained it zero. So that is called unexplained investment. So if you have shown in the balance sheet your investment is zero, but during investigation department find out that you had made investment in 24-25, 40 lakh rupees, which has not been shown in the balance sheet. So that would be called black money or undisclosed income. So the previous year would be 29-30, but the earning year would remain 24-25. assessee has made investment which are not recorded in the books of account, and assessee has no explanation or the explanation is not satisfactory, then that income need to be taxed as undisclosed income. In the same way, unexplained money. If you have found the owner of money, bullion, jewelry, or other valuable article, and that has not been recorded in the books of accounts or it did not match with your books of accounts, then the difference could be treated as undisclosed money. And that would be undisclosed income. That would be black money. Amount of investment not fully disclosed. If you see this point related with point number 2. Suppose in balance sheet, property value has been shown 10 lakh rupees for 25-26 previous year. But when during previous year 30-31, department found the property value from registry paper is 90 lakh rupees. So that is undervalued shown. In point number 2, you did not shown the investment. But if the investment has been shown, but the value is not correct, then the difference, that is 80 lakh, would be treated as undisclosed income. Example also there. Unexplained expenditure. If you have made any expenditure which does not matched with your income, suppose you have disclosed your income 20 lakh rupees to the income tax department, and in last 3 years, total income disclosed by you is 30 lakh rupees. So technically, you have a capital of 50 lakh rupees. Suppose there is no other expenditure. So technically, you have disclosed income tax department that you have earned in last 3 years 30 lakh rupees and 20 lakh rupees in current year. So technically, department knows that your capital is 50 lakh rupees. Now, if you purchase the house, this is an expenditure of 80 lakh rupees. So this does not match with your income, or you purchased a car for 80 lakh rupees, or you purchased a property or jewelry for 80 lakh rupees. So government will see that you have disclosed your income in last 4 years. Total 50 lakh rupees capital should be there if there is no other expenditure. So how someone can purchase a property of 80 lakh rupees when they have disclosed only 50 lakh rupees income till now? So either you have taken a loan of 30 lakh rupees that you have to show if you have taken, but because you have income more than 50 lakh, the 30 lakh was black money. You did not show to the department and you think department does not know about this. But when you make an investment which does not match with your income or capital, the department can ask you, and if you are not able to explain it, the difference would be treated as your undisclosed income. The 6th point is regarding hundi. Amount borrowed or repaid on hundi. So in case of hundi is a kind of a bill of exchange, regional bill of exchange. We called it generally parchi. When any person gives loan to someone else or the loan has been repaid, so generally if it has been worked out via bank, account pay check, RTGS, NEFT, etc. So government knows who is paying tax, who is giving the loan to whom, and whatever interest is coming, that needs to be shown as an income. But in a local market, there are multiple local market in which the renowned person of that market who is having net worth or a powerful person or very rich person, he actually can run a loan taking and repayment work on hundi. That's called parchi. You must have gone through with this hundi concept or bill of exchange concept. So in a generally legal bill of exchange, you have to discount it from a bank. But in case of hundi, that person who is the established person in that market is technically a bank. He write purchase, you can discount your purchase from that person. And on that basis, you can take the loan or you can repay the loan. And this whole transaction has been worked out in cash. And cash is which cash? The cash which has not been tax paid cash, which is worked on as a undisclosed cash. So government will not know about these transaction of borrowing and repayment because the purchase has been made on a simple paper, and after the transaction of loan taken and loan repayment has been done, this purchase is going to be destroyed. So now understand what happened. Mr. A provide 20 lakh rupees cash loan to Mr. B on a parchi basis. And after some time, Mr. B repaid that loan to Mr. A in cash. So government does not know who is paying, who is repaying. And the cash which is utilizing in these kind of transaction is what kind of cash on which tax has not been paid. So that undisclosed cash has been regulated in these kind of market on the basis of hundi. So income tax made a provision that if you want to work on hundi, where any amount borrowed or repaid on hundi due thereon has been repaid other than an account paid check. So hundi is a allowable bill of exchange. You can utilize it. But the payment on behalf of hundi, whether it's a loan or the repayment of loan, that should be done only via account paid check or RTGS or IMPS or NEFT, etc. So government will come to know who is paying the amount and who is repaying the amount to find out whether these amounts are genuine or these are via undisclosed cash. So the provision has been made that any payment or repayment should be done via account pay check. That means via bank, it should be regulated or transferred on hundi. And if it has not been done, the amount so borrowed or repaid will be treated as the deemed income of the person borrowing or repaying the amount. If you did not take that amount or not do the repayment via account pay, bank check, etc., then the person who is borrowing or repaying the amount of borrowing, suppose you took 20 lakh rupees and you paid 21 lakh rupees as a repayment, as a loan repayment, and it has been done in cash and government comes to know. Anyhow, if they comes to know, then that 21 lakh rupees would be treated as your undisclosed income. And read very carefully. That's 20 lakh you have taken as a loan and 21 lakh you paid, 1 lakh rupees interest. So this whole 21 lakh rupees would be treated as your undisclosed income. So government just caught one person, not the lender. Only the borrower needs to be tracked. Payer has been tracked. The person borrowing or repaying. So we are talking about the same person, the payer. You take 20 lakh rupees in cash on loan on a hundi and you paid 21 lakh rupees as a repayment with 1 lakh rupees interest. So this 20 lakh is going to be your undisclosed income for the borrower. Out of this 21 lakh, because 20 lakh already become the undisclosed income, so balance 1 lakh only is going to be your undisclosed income. Suppose the repayment has been done via account pay check, then only 20 lakh would remain your undisclosed income. Suppose 20 lakh has been paid as per account pay check, but the full repayment has been done in cash, then full 21 lakh would become its payer undisclosed income. Clear? So this is also an example of undisclosed income. The special rate in all of above these cases, if there has been tracked out, the total effective rate would be 78%. 60% would be your tax, 25% is surcharge, and 25% of 60%. 60%, 25%. That would come 15% technically. And 4% cess. Cess would be on tax plus surcharge is 15%. So total is 75%. And 4% cess on this 75%. That would be 3%. So aggregate, you need to pay 78% tax on black money. No deduction, no exemption, no basic exemption limit, no expenses can be allowed. Whatever amount has been treated as undisclosed income need to be taxed directly at 78%. Now, concept and definition of income. Income word covers receipt in the shape of money or money's worth, which arise with certain regularity or expected regularity from a definite source. So income is having some special character. It could be monetary or in kind also. Monies or money's worth. Suppose I am giving my services to my client and he's paying me 5,000 rupees. That is my income. If he in exchange of my service, he give me a gift of worth 5,000 rupees. And suppose a wristwatch he gave me for 5,000 rupees. Still that 5,000 rupees would be my income. So money's worth also be regarded as income, which arise with certain regularity. So either it should be regular or expected regularity. Certain regularity or expected regularity should be there, and the source must be definite. After reading this definition, you might think that if the income is irregular, that is not income. No, even it is irregular, that would be your capital receipt, and that has also be taxed. So nothing has been left. Money's worth. From the first, second point number two, you might be thinking that if not regular, not income. But this point has been explained in detail in the next sentence. Under income tax, even any receipt which arise not from any definite source, that is also income. And even not regular, then also income, treated as capital receipt. So income includes revenue receipt as well as capital receipt. So you can see this is revenue receipt definition, and if there is no regularity and if it is not definite resource, it is also going to be taxed as, but it is a capital receipt. So what is exactly revenue receipt? What is exactly capital receipt? You will understand in detail when we will read the related chapters. Like business incomes are technically revenue receipts. Rental incomes are revenue receipts. Salary is revenue receipt because they are regular and from a definite source. Capital gain income, when you sell any property, sale profit on sale of asset, that is a capital receipt. Lottery income, gambling income, those are capital receipt because not regular and source is not definite. So in different chapters, you will understand this concept in detail. In the characteristics of income, there are multiple cases has been discussed, but technically these cases connected to some specific heads of income. In general, like regular receipt and capital, as I explained it to you, regular receipts are like business income. So in detail, you will understand what is the meaning of regular receipt under business head, salary head, or house property. You can read it because it's simple language. If there is any query, I will explain it to you. Casual receipt like lottery income, etc. that you will discuss or we will discuss in income from other source. Revenue receipt, again, same thing. Capital receipt, which is on capital gain, etc. that is called capital receipt. So we will discuss these topic in capital gain also. But as a homework, you should go through with these points. If there would be any query, I will explain it to you. Net receipt versus gross receipt. So income is taxed on net receipt basis. Net receipt means after expenses. Like business sale is not going to be taxed. Out of this sale, expenses of business, etc. So the net profit is going to be taxed. This is gross receipt. So under income tax, net receipts are taxable. Net receipt means after deducting the respective expenditure under income from house property, capital gain, etc. So that is going to be discussed. Due basis versus receipt basis. Like this is due base means mercantile basis taxability and receipt basis means cash system based taxability. So there are certain cases like business income and income from other source can be taxable on due or receipt basis as the case may be. Other income needs to be taxed on due basis. So that is also going to be discussed under PGBP head and income from other sources. Application of income versus diversion of income. Application of income means if you earn your income, if any income has been earned by you or received by you, after that, if you donate that income, if you expend that income, if you gift that income to anyone, it does not matter. You need to pay tax on it. Suppose you earn 10 lakh rupees. Out of that 10 lakh rupees, you gift full 10 lakh rupees to anyone. So that does not matter. You have to pay tax on this 10 lakh rupees because once the income has been accrued, arised, or received by you, the taxability liability is upon you. So application means utilization of income after earning it. So once you earned or income has been accrued in your hand, then you have to pay tax on it. Any subsequent event, whether it's an expenditure, donation, gift, does not matter. But diversion of income is different. If you divert your income before accruing it, if the income does not accrue to you, it has been diverted before it is accrued or received by you. Now that is not going to be taxed in your hand. So kindly go through with it. We have example also regarding this. You can go through it. If there would be any problem, we will solve it in the next class. Again, concept of capital receipt, etc. We'll discuss in different heads like PGBP, capital gain. Definition of income, section 224. And you will see there are multiple points. 1, 2, 3, 4, 5, and this is almost 19 points is there. 19 points are there. But what will happen if I will discuss this definition with you that profit and gains is the part of income. So we need to understand what is the meaning of profit and gain. And for that, we are having PGBP chapter. If you'll try to understand this definition, that would be really difficult for you because you can see third point, the value of any perquisite. Now you do not know what is the meaning of perquisite. And perquisite has been explained in detail in salary chapter. 142-page chapter is a salary chapter, out of which I believe 15 pages or 20 pages belong to this perquisite part. So when we should understand this perquisite mean, when we will cover salary chapter. If I try to explain it over here, that will make you more confused and you will feel it's so difficult. So that's why every point of this definition is going to be discussed in the respective chapters to which that belong. Like profit and gains of business and profession charged under section 28, 2, 3, 3A, 3B, 3C, 5 and 5A. How can I explain you these points right over here? Because these needs to be discussed under PGBP head. So as a student, if you will read these points, you are going to be very confused right now. And as a faculty, for me is also it's very difficult to explain because these are very huge topics. Every single clause is very huge. I am not able to make you understand. And if I try to make you understand, you will feel it so complicated because these are the things which needs to be discussed in detail in future chapters. Like deemed profit, how I will explain you what is deemed profit over here. So perquisite, capital gain chapter we have, winning from lottery we have. So as a student, if you'll read them, you're going to be very confused, but please read once, but do not try to understand it because one by one, I'm going to explain each of these points in respective chapters. You know what will happen when we will cover all 5 heads of income. And then if you'll come back and read section 24 definition, then you will be able to understand, okay, all these points I have already discussed and I know what is the meaning of each point. So after 5 heads, that would be really easy. Even you do not need to understand this definition after 5 heads because we will able to understand each point separately in detail on those 5 heads. Fine. So just you can read it, but the detail we will discuss in the later part, like keyman insurance policy. That needs to be discussed under salary head also, under PGBP also it is, and it is income from other source also part. So we will discuss all these things in the respective chapters. Okay. So some student was asking me, sir, please explain the definition of section 224. So students, that's an advice to all of you that we will take this definition later on. Okay, thank you means only chapter part 1 has been completed. Now we are moving on to rates of taxes topic. And this is my quotation for all of you. Revise twice. That's my advice to make you wise. The more you will do revision, your provision will be stronger. So let me see the queries. Then we will move on to our next topic, that is rate of taxes. That is a numerical part, what we are about to start. Kuldeep is saying receipt and not income less expenses. Okay. Okay. Shraddha is saying, in case of Hundi, she might be asking, sir, but if there is only cash dealing, then is there any scope for government to know about such dealings? Look, Shraddha, it's very difficult for government to track these kind of Hundi transaction, which is going through in a smaller market. I believe also that practically it's not that easy. But when law has been made, now the law has been made on this way that if suppose we comes to know, then we should have provision for that. Suppose if section 69D is not there, then even after finding these cases, in any way, suppose we are able to find these cases. Somebody has reported us in that market, this purchase system is going on, income tax went there and raid and find out that this transaction has been going on. Okay. So there must be some section who gives you power that in that situation, what we can do. We are able to find this kind of transaction is different, but at least we should have power for that if this happen, we will do this thing. So that's why these kind of provisions are there. Anil Galt is asking, so please tell me when will income taxable under accrual basis and when will income be taxable under cash basis. Dekho, Anil, there are certain heads of income like salary, income from house property, and capital gain. In those heads, income needs to be taxed as per accrual basis. In case of business and income from other source, we have choice. Either we can tax on cash basis or we can tax them on accrual basis. How we are going to tax on accrual basis or cash basis? We are going to see that in those chapter. In case of salary, house property, and cap gain, the provision says accrual or cash, whichever is earlier. Earlier, whether cash received, you have to tax it. In case of business and other source, you have a choice. So we will discuss in detail when those chapter we are going to cover. Okay. Assessing in default means we have discussed it last class, Shalini. If you are not compliance with any provision of income tax, then you will be called assessee in default. So explain one's tax implication on undisclosed income. That's how 78% came. I just explained it to you, but let me give you one more time how it's been 78%. Unexplained expenditure is treated as income. Yes, because you have made expenditure which is the excess of your disclosed income. Suppose in your pocket, your parents give you 100 rupees in the morning as a pocket money. Fine. In the evening, from your pocket, they find out 140 rupees there. So they gave you 100 rupees. Now 140 rupees has been recovered. So where that 40 rupees has been came, either you need to explain that you have taken loan from somewhere, you have received some gift, or you have worked somewhere for 40 rupees. Otherwise, if you are not able to disclose that, that would 40 would be treated as your income. In the same way, if 100 rupees has been given to you by your parents and you bought a article from market for 140 rupees, so how that expenditure you have made? But when you have only 100 rupees, that means there is some other source of 40 rupees. That's why you are able to purchase or do that expenditure, which is in excess of your income. So if there is an expenditure which is in excess of your income, the government will treat that this extra payment has been done by black money. So that would be your unexplained expenditure, which would be treated as your black money. Why agricultural person will file income tax return? We will discuss the provision of agricultural income, then you will able to understand. I will take the quiz. Do not worry. We have a problem class also on 1st November for starting these 5 classes. So I have prepared MCQ also, but first of all, I do need to cover the topic part. After that, definitely I'm going to take the MCQ. Just do not worry about it. Meenu is asking, sir, what if it is shown less and spend more? Just asking. If you have shown asset purchase as high amount and shown less, not possible because you need invoice for it. Whatever amount of invoice you will get, that is going to be your expenditure. And if the invoice value is less and the market value is high, then the difference would be treated as your black money. Tina is saying, while solving sums, you will also take past year question because this will help us more to understand. We will solve all the illustration, your test, your knowledge question, and the MCQs. Past year question would be taken later, maybe at the revisionary class or sometime else, because we have to complete the study part first. Relative, even give you invoice, then the fair market needs to be checked. Riddhi Ben is saying, sir, if someone hiding income for some certain year and each year total income was less than tax limit, but now total black money is more. No, no. Every year income would be checked. If for every year income it's less than the exemption limit or taxable limit, that would not be treated as your black money. But you have to prove that if government found 50 lakh rupees from your house, then you have to prove these are the income of several years, like from last 15 years, and the separate year income is less than the taxable limit. Then there would not be treated as black money. Okay. So this is now income tax rates we are going to discuss. And there are some quotation for you. Some are destined to succeed and some are determined to succeed. So I believe in the second one. Now, rates of tax, surcharge, and cess. So we are having three kinds of tax. First of all, the tax needs to be applicable, then surcharge, and then cess. What is tax? What is surcharge rate? What is cess? We will discuss in this topic. Now, before that, you should understand that we are having two kind of tax structure nowadays. Two regime we have for the applicability of tax. There are two regime we have to follow. So income tax rates. So now the interesting parts start, because in the first part of this basic chapter, multiple things related to the future chapters. So it seems quite boring at times that, okay, this we are going to discuss in detail in next chapter. This is going to be discussed in next chapter. So what is happening? This is feels like quite boring. And of course, the theoretical part only there. I'm not saying it's not important. It is important. But generally what happens, the definition part, etc., seems quite boring. But now we are discussing income tax rates provision. So this is our day-to-day work. And multiple people must be asking to you, okay, fine, if I am having this much income, how it's going to be taxed? What should be my tax? So after these provision, you would be able to tell them what would be their tax liability. So this is interesting for your practical knowledge also. Income tax rate. So now we are having two regimes. Today class might be 10 or 15 minutes more because I want to complete this regime part in this lecture. So there are two kinds of regime. One is optional tax regime and one is default tax regime. Under optional tax regime, the category has been divided into three subcategories. For those individual, those are resident of India and age is equal to or more than 80 years at any time in previous year. So if you are an individual resident in India and your age is equal to or more than 80 years at any time in previous year, we call them super senior citizen. So for those super senior citizen, up to 5 lakh rupees, their income, if up to 5 lakh rupees, there would be no tax. We called it basic exemption limit, BEL. Basic exemption limit is 5 lakh. That means up to 5 lakh rupees, there would not be any tax liability if you are a super senior citizen. The second category is for those individual, those are resident in India. age is more than equal to 60 year, but less than 80 year. Why less than 80 year? Because if you are 80 year, you will fall in category 1. A category, suppose. This is my B category. So more than 60 year or equal to 60 year, but less than 80 year at any time in previous year. They are called senior citizen. First ones are super senior. Now they are senior citizen. They have exemption limit up to 3 lakh. So their exemption limit, basic exemption limit is up to 3 lakh. They do not need to pay any taxes. Till now clear? Now the C categories. The category C is for all other individuals. Age is less than 60, whatever it is. Resident, non-resident, all categories. So if you do not fall in category A or B, you will be form part of category C. So if you are a non-resident, like we need resident over here in both cases. So if you are a non-resident, then age does not matter. Whether 80 year or more or 60 year or more, you will always form part of category C. And for resident, if your age is less than 60 years. So let me tell you a very simple technique. Apply on yourself. Apply on yourself and tell me, or do not tell me, just apply yourself and tell yourself in which category you fall. Do not write the answer. Do not write the answer, because I believe you all will give the correct answer. So you practically all, I believe, me, you, generally, if we are having age of less than 60 or up to 60 years, we all fall in the category C. So category C is for those are not falling in category A or B. So those individual, other individual we can say. And HUF, AOP, all BOIs, an artificial judicial person, they will also fall in category C. So the tax structure for all other individual except A and B and all these HUF, AOP, BOI, AJP, they all have the same tax structure as per category C. And we all have the basic exemption limit 2,50,000. Till now it's clear. We did not discuss the default tax regime. That 12 lakh rupees exemption you might be thinking about, that would be the part of default tax regime. So we are discussing first of all optional tax regime. So in optional tax regime, there are 3 categories: super senior, senior citizen, and all other individual, and HUF, AOP, BOI, AJP, those all having the basic exemption limit of 2.5 lakh. I hope it's clear till now. Moving ahead, now what is the tax rate structure for optional tax regime? We are not discussing default tax regime till now. We are just discussing the optional tax regime provision. So I would be able to give you some example for homework also. So now for the purpose of taxability, let me give you a very interesting way to learn it. Suppose there is an income train. There is an income train. Whenever you need to calculate the tax on this optional category, take this an income train. So the first station of this income train is 5 lakh rupees. The first station of this income tax train is 5 lakh rupees. So any income, if that is going to be taxed, and if it is up to 5 lakh rupees, the tax rate is 5%. Now you can see, in case of super senior citizen, up to 5 lakh rupees is the exemption amount. So they do not need to pay any tax at the rate of 5% if there is income up to 5 lakh rupees. Yes, but in case of B category, their exemption is 3 lakh rupees. So out of this 5 lakh, 3 lakh would be exempted. So balance only 2 lakh would be left. If the B category person income is 5 lakh rupees, then out of this 5 lakh, 3 lakh is going to be exempted. So how much balance will left over here? 2 lakh rupees. So 2 lakh is going to be taxed at the rate of 5%. In case of C category income, up to 5 lakh, 2.5 lakh is exempted. So balance 2.5 lakh rupees is taxed at the rate of 5%. The next station of this income train is the next station number 2 of this income train is 10 lakh rupees. First station was 5 lakh. Second is 10. So the remaining income between this would be next 5 lakh. So first 5 lakh, the provision is if any income is going to be taxed up to 5 lakh rupees, then the rate is 5%. From this 5 till the 10, that means balance 5 lakh rupees. If it is going to be taxed, the tax rate would be 20% for all these A, B, and C category person. And if income exceed the 10 lakh rupees, if it exceed 10 lakh rupees, then the tax rate for all A, B, C category is 30%. That's it. We have a table also for this. We have a format also. We have a theoretical provision also. But I'm just giving you one income train structure, and with the help of this structure, you can solve every kind of question which relates to optional category income. Let me show you how. So this is, we just need to know what is the basic exemption limit for 3 categories and this income train. It's very simple. Up to 5 lakh, the rate is 5%. Next 5 lakh, if income falls, rate is 20%. Exceeding this 10 lakh rupees, any income that is going to be taxed at 30%. How? For example, suppose I am giving you an example of Mr. A, aged 85 year and resident. So first of all, we have to see in which category we fall. Now this example falls in category number A. An income has been given in question, suppose 16 lakh rupees. Now with the help of this machine, it's a kind of a machine. You will put the value, you will get the answer. Okay, in case of category A, up to 5 lakh is exempted from the 16 lakh. So first 5 lakh, there would be tax would be nil. Why? Because up to 5 lakh, there is no tax. After 5 till 10, from 16 lakh, how much income will fall in this category? Of course, 5 lakh rupees. Up to 5, no tax. From 5 to 10, yani next 5 lakh rupees, now the tax rate would be 20%. So up to 10 lakh, now the limit has been finished. How much income left after 10 lakh in this category now? 6 lakh remains over here. And what should be the tax rate on this 6 lakh? 30%. So 5 lakh 20%, 1 lakh rupees tax. 6 lakh 30%, 1 lakh 80,000 rupees tax. So total tax would be 2 lakh 80,000 rupees. Understood? Okay. Second example. Suppose Mr. D is a non-resident, aged 65 year, income 9 lakh rupees. Now, in which category Mr. D falls? He is a non-resident. If you are a non-resident, you will always fall in C category. So the exemption he is having is only 2.5 lakh rupees. Now you will see up to 5 lakh, 2.5 lakh is exempted. So how much balance is left for the purpose of taxability? This 2.5 exempted out of 5 lakh, 2.5 lakh rupees is taxed at the rate of 5%. So up to 5 lakh, 2.5 exempt, 2.5 tax at the rate of 5%. That means 12,500 rupees tax. And how much balance is left? Out of 9 lakh, 5 lakh has been treated in first platform. The balance is 4 lakh rupees. And what should be the rate? 20%. That means 80,000. Total tax would be 92,500 rupees. So you just need to learn the basic exemption limit for these category and this income train. This would be like a machine. You will put the value, you will get the answer. I hope it's clear. You will do the practice, and then these provisions are very, very simple. 5-6 questions you will practice and you will solve each these kind of question. Fine. Now moving on to default tax regime. Under default tax regime, the good news is there is no category A, B, or C. For all individual, resident, non-resident, whatever is the age, does not matter. HUF, AOP, BOI, AJP. Same provisions are there. So it's a good news. The basic exemption limit is 4 lakh rupees. The basic exemption limit is 4 lakh rupees for all of these. Now the income train in this category is different. It's like table of 4. It says for first 4 lakh rupees, because the exemption is common for everyone, tax is nil. The next 4 lakh rupees. So total is 8 lakh technically. So the next 4 lakh rupees, the rate is 5%. Third, now you have to learn the table of 4. The next 4 lakh rupees, the rate is 10%. And the rate is going to be increased by 10%. The next 4 lakh rupees, the rate is 15%. Till 24 lakh, we have to continue it. The next 4 lakh rupees, the rate is 20%. The next 4 lakh rupees, the rate is 25%. And the balance is anything which is above 24 lakh needs to be taxed with 30% taxability. So you can see this is first 4 lakh. Now this is 8 lakh. Now this is 12 lakh. Now this is 16 lakh cumulatively. If we see it, now this is 20 lakh cumulatively. And this is now 24 lakh. So we have rate 5% increment up to first 4 lakh, no tax. After that, you have to add 4 lakh every time. And the rate would be as per 5% table. 5, 10, 15, 20, 25, 24. Suppose in this example, if I'll give you an income of 15 lakh. And I asked you to calculate the tax. So what will happen? First 4 lakh, tax would be nil. Next 4 lakh, 5%. That means 20,000. 8 lakh. Now next 4 lakh, 10%. That means 40,000. So total is now 14,000. Now balance is 3 lakh rupees left. That is 15%. So total tax would be 1,05,000. So the good thing about the default tax regime, it's a same rate for everyone, the same exemption limit for everyone, and there's a 4 lakh rupees income table, and the rate is like 5% rate table. So accordingly, you have to go till 24 lakh. After that, the rate is 30%. In case of optional regime, after 10 lakh, the rate is 30%. And in case of default tax regime, after 24 lakh, the rate would be 30%. So you might be thinking that this option is very bad because after 10 lakh, the rate is going to be 30%. So you need to pay more taxes, but it's not like that. There are certain conditions you have to fulfill if you want to take the benefit of default tax regime. If you want to take the benefit of low rate of taxes, in this case, the tax rates are really low. You have to sacrifice lot of deduction, exemption, etc. So that could be a reason. You cannot decide at once that this optional tax regime is having higher tax and default tax regime is having lower tax. It's not like that. Under default tax regime, there are a lot of deduction, exemption you need to sacrifice. So we have to calculate tax by both method to see which is most beneficial to the assessee. Understood? Moving on to the provision now. Now you can see these are optional tax rate structure. Like in case of any other person, the C category is this. 2.5 lakh, 5%, then 5 lakh, 20%, balance is 30%. This is our senior citizen case. First 3 lakh exempted. Exempted rates are over here. Okay? Then next 2 lakh is 5%, then 20%, balance is 30%. For super senior citizen, first 5 lakh free, no taxability at the rate of 5%. Why? Because up to 5 lakh, 5% rate is applicable. And if your 5 lakh is free, then means 5% rate would not be applicable in any case of super senior citizen. The rate is direct 20% and then balance is 30%. There are some special rates also. These are the general rate. In the first session, I have discussed with you that there are normal rate of taxes and there are special rates of taxes according to your special income. Like capital gain, casual income is having separate rate. These rates not applicable on that. So these special rate going to be discussed later in those specific chapter. Fine. We are just discussing the normal rate of tax structure in this chapter number 1. There's a clarification. You can go through it. It's a good clarification. This is for your homework. Now there's a rebate concept. Rebate is just like a discount. Rebate is nothing else. It's just a pure discount. And rebate says rebate of 12,500 or amount of tax lower if your total income is up to or less than 5 lakh rupees. And this rebate is only applicable for individuals. Those are resident. No other can claim the benefit of rebate. No HUF, no AOP, no BOI. And this is for optional case we are discussing, not for default tax regime. For default tax regime, rebate provisions are different. So in case of optional tax regime, you can claim a discount of 12,500 rupees or amount of tax, whichever is lower. When you can claim? If your income is up to rupees 5 lakh rupees. And this benefit is only applicable to individuals. Those are residents. So 3 most important thing: amount, when to apply, and who can claim the benefit under optional tax regime. Calculation of tax format. First of all, you have to calculate the tax as per the slab rate, as per optional tax regime or default tax regime. Then you need to check whether rebate is applicable or not. If rebate is applicable, you need to reduce it from your tax liability. After that, you have to calculate the surcharge. Surcharge is what? We will discuss it. Surcharge is a tax on tax. If applicable, surcharge would be applicable if your income exceeding 50 lakh rupees. Fine. So after rebate, you need to apply the surcharge. That would be called total A. On that surcharge, you have to apply the cess of 4%. And this 4% needs to be applicable on total number A. After that, this would be my final tax liability. So tax is not just the slab rate. The rates minus rebate, if applicable, plus surcharge. And on this total, you have to apply cess 4%. This would be your final tax liability. It should be rounded off in the multiple of 10 rupees. Now there are some example for your help to understand the provision. This is all for optional case of regime. Suppose total income is 2,60,000 in case of individual resident less than 60 years of age. So C case we are talking. So out of this 260, 250 is going to be exempted. Balance 10,000 need to be taxed at the rate of 5%. So tax would be 500. Now rebate says if your total income is less than 5 lakh or up to 5 lakh, then you can have a rebate of 12,500 or the amount of tax which has been given in question, whichever is lower. You cannot reduce 12,500 because only tax is 500. So only maximum 500 you can reduce and the balance would be your tax liability. Because there is no tax, so there cannot be surcharge, there cannot be cess. Second example, this is for your homework. There are all solved example over here. All these second, third, fourth, fifth, sixth, and again 1, 2, they all are your homework part. Kindly go through with these example. These are important note. Rebate will provide before calculating cess that we have shown in the, of course, diagram part. Surcharge concept we will discuss. For the time being, surcharge will be applicable if your total income exceeding 50 lakh. The surcharge would be 10%. That we will discuss in next class. Default tax regime rates. What we have discussed. This is your homework. Kindly read it out. These were the condition you have to sacrifice if you want to take the benefit of default tax regime rate structure. These are certain deduction exemption you cannot take. And these are the list, and these kind of deduction exemption we will discuss in every specific chapter. So you can just read it out. What is leave travel concession, what is house rent allowance, etc. That would be discussed in different chapters later. But you can see how many things you need to leave for the purpose of claiming the default tax regime. Surcharge provision for default tax regime we will also discuss later. And rebate provision will also be there. But before that, let me see if there is any homework in the study material for all of you. So I can give it to you. 25 lakh. Just a second. Student, you are having some illustration. I am suggesting you kindly go through it. Illustration number 3. Kindly note it down. Illustration number 3 and study material. Page number 1.556. Try this. We will discuss these illustration in the next class. Okay, next is illustration number 4. You have to try it. Page number 1.61. Okay, till now only try these illustration number 3, illustration number 4. Let me take the queries. If there is anything. See if there is any queries. Satish is saying clear. Kuldeep. Okay, there is no query left. So we can do one thing. We can try some MCQs. It will not take more than 5 minutes, or it's only 9:48. So we will discuss the MCQ, I guess, in the starting of the next session. Before ending the class, there is a small story for all of you. It will take 2 or 3 minutes. Stories will be in Hindi always. तो एक बड़ी सिंपल सी कहानी है. एक छोटा सा जगह थी जहां पर बहुत सारे एनिमल्स रहते थे, और वहां पर एक डिसाइड किया गया कि हमें एक लीडर चुनना है अपने लिए. तो वहां बहुत सारे डॉग्स थे और बहुत सारे डोंकीज थे. तो डिसाइड हुआ कि जो फास्टेस्ट डॉग है उसके साथ जो डोंकीज का लीडर है उनकी रेस होगी. जो भी रेस में पहले डेस्टिनेशन पे पहुंचेगा उस डॉग में से या डोंकी में से, दैट वुड बी द लीडर ऑफ देयर सोसाइटी फॉर बोथ. तो ऑफ कोर्स डॉग्स आर वेरी फास्ट इन रनिंग. तो जो डॉग्स थे उन्होंने अपना बेस्ट जो लीडर था वो निकाला कि ये रेस में पार्टिसिपेट करेगा, एंड डोंकीज ने अपना वाला भी. बट डॉग्स जानते थे कि डोंकीज कैन नॉट बी दैट फास्ट इन रेस. तो रेस शुरू हुई. डॉग्स और डोंकीज का जो पाथ था वो अलग अलग था सेम डिस्टेंस का, बट डॉग्स को अलग, एक डॉग जो था लीडर उसको अलग रास्ते से दौड़ना था, एंड डोंकी को अलग रास्ते से. डेस्टिनेशन वॉज सेम. रेस शुरू हुई तो डॉग बहुत फास्ट दौड़ा, बहुत फास्ट दौड़ा, बहुत फास्ट दौड़ा, एंड डोंकी भी अपनी पूरी बेस्ट एफर्ट से किया. एंड जब रेस फिनिश हुई तो डॉग ने देखा कि डोंकी उससे पहले पहुंच गया था जगह पर, एंड ही वाज चूजन एज लीडर. व्हाई इट हैपेंस? बिकॉज जब डॉग्स की रेस हो रही थी तो जो डॉग बहुत फास्ट था, जब वो दौड़ रहा था, तो डॉग्स में एक हैबिट होती है कि जब वो दूसरे डॉग्स को देखते हैं स्टार्ट बार्किंग. तो जो बाकी डॉग्स थे वो उसके पीछे पीछे भागने लगे, एंड वो अपना फोकस छोड़कर उन दूसरे डॉग्स के साथ इन्वॉल्व हो गए, बार्किंग एंड ऑल. बट जो डोंकी था वो बहुत फोकस था. डॉग्स उस पर बार्क भी कर रहे थे, तब भी वो अपनी पूरे बेस्ट एफर्ट के साथ दौड़ता रहा. एंड व्हाट हैपेंड? बिकॉज उस डॉग का टाइम वेस्ट हुआ अपने बाकी डॉग्स के साथ इंडल्ज होने की वजह से, बार्किंग एंड एटसेट्रा, इंटरफेरेंस की वजह से, बट डोंकी ने अपना फोकस नहीं छोड़ा एंड ही रीच्ड बिफोर इवन वन, ही वाज नॉट दैट फास्ट। तो लाइफ में करना क्या है ना, आप जिस रेस में हो टू बिकम अ चार्टर्ड अकाउंटेंट, देयर वुड बी अ लॉट ऑफ पीपल जो आपको डिस्करेज करेंगे, आपको बोलेंगे आपसे नहीं हो पाएगा, इट्स नॉट इजी, तुम कैसे करोगे, बहुत इंटेलिजेंट बच्चों का कोर्स होता है। तो लेट मी टेल यू, इंटेलिजेंसी वाला कोई फैक्टर नहीं है हमारे कोर्स में, इट्स जस्ट प्योर हार्डवर्क एंड फोकस। तो डू नॉट गेट इन्वॉल्व विद देम, डू नॉट वेस्ट योर एनर्जी विद देम। क्योंकि अगर आप बहुत होशियार भी हो, इंटेलिजेंट भी हो, बट अगर आप इन्वॉल्व होंगे, डिस्ट्रैक्ट होंगे फालतू चीजों में, ऐसे दोस्तों के साथ जो बोलेंगे चलो घूमने चलते हैं, जो सीए नहीं कर रहे, इट विल वेस्ट योर टाइम। आप कितने भी इंटेलिजेंट हो, बट अगर अपना टाइम का सही यूटिलाइजेशन नहीं किया, फोकस नहीं रखा अपने टारगेट पर और गोल पर, कितने भी फास्ट हो, हार जाओ। एंड अगर आप उतने फास्ट भी नहीं हो, बट अगर आप फोकस करोगे, लोगों की बातों को अवॉइड करोगे, अपने ऊपर कॉन्फिडेंस एंड भरोसा रखोगे, इफ यू विल गिव योर बेस्ट शॉट, लेट मी टेल यू, यू विल बी अ चार्टर्ड अकाउंटेंट। आई एम द एग्जाम्पल ऑफ इट। मैं बहुत होशियार बच्चों में नहीं आता था, मैं रियलिटी बता रहा हूँ। अप टू 12 सपोज आई हैव स्कोर्ड सेकंड डिवीजन इन माय 10th बोर्ड्स, 59%। जब मैंने सीए ज्वाइन किया, एवरीबडी वाज सेइंग कि तुम क्यों कर रहे हो, तुम्हारे लायक ये कोर्स नहीं है, बहुत डिफिकल्ट है। एंड मैंने वो बहुत 3.5 ईयर में अपना सीए कोर्स कंप्लीट कर लिया था। तो इट्स नॉट अबाउट कि आपको लोग क्या कहते हैं, कि मुझे बिलीव था कि मैं कर लूंगा। एंड मैं इंटेलिजेंट नहीं था, बट आई वॉज वेरी हार्ड वर्किंग। मैंने सब कुछ सेक्रीफाइस करा इस कोर्स के लिए, एंड आई एम रियली हैप्पी कि मैंने अपनी लाइफ का एक बहुत बहुत इंपॉर्टेंट पार्ट इस कोर्स को दिया और पूरी डेडिकेशन से दिया। सो इट्स ऑल अबाउट डेडिकेशन एंड हार्ड वर्क। सो डोंट बी दैट डॉग जो बाकी लोगों के साथ इन्वॉल्व हो, उनको एक्सप्लेन करने की कोई जरूरत नहीं, लोग बोलते रहेंगे, लेट देम। जस्ट बी फोकस वट एवर यू बिलीव एंड बिलीव योर सेल्फ, यू कैन बी a CA very soon. Let me see if there is any query. Shamli. No, Shamli, there is rebate in a default tax regime. We just discussed the provisions of optional tax regime. The default tax regime is having the rebate of 60,000 rupees. That we will discuss in the next session. Inspiring story. Thank you for so much motivation and thank you for such a valuable session. You're welcome, Saipa. These are technically not stories, these are the reality. And if you will think about very deeply in these stories, you will find your inspiration. Okay. Yes, I'm telling you, इंटेलिजेंसी बहुत मैटर नहीं करती हमारे कोर्स को पूरा करने में। द हार्ड वर्क, द डेडिकेशन, द फोकस एंड द वन मोर इंपॉर्टेंट थिंग, sacrifice matters. You need to avoid parties, function, etc. to be a prefix of CA before your name. And that is really the requirement of this profession. No query, okay. Okay, okay. Please do your homework. Please revise the things what we have discussed in this class. And the next session, we will complete our rates of taxes and agricultural income provisions. I think there is no more queries left. Prajapati is saying, Acha, thank you for story. Okay, everybody is saying thank you. Anyone really left? Okay, Saipa is saying sacrificed my job for studying C and now I'm studying with full focus. Well done. High five from Wi-Fi. You have to do sacrifices. All the best, Saipa. So I guess no more queries related to our lecture. Yes. So Mr. Manish, can we close the session as all queries has been done? Yes, it's done. Thank you so much. Good day.